What's going on, you guys? My name is Zach Hartley, and in this video I'm going to walk you through my one-page trading strategy. It is a simple, easy to use template that lists all of the different aspects that you're going to need to think about before you actually sit down at your computer and execute those trades. So in this video I'm going to walk you through how to use it. You can download it for free with the links down below, and let's get to it. Okay, so this is what the PDF looks like. It is super simple here. As you can see at the top, we've got three different aspects. In the middle we've got our entry and exit, and at the bottom we've got our review section. So altogether you've got 5 different sections here. Now let's get started with the morning checklist. So for me, this is actually the one that changed everything for me. I used to just roll out of bed, walk to my computer, try and make a couple trades, get really caught up in it, and then I'd feel bad because I didn't have breakfast or I didn't get started right, and it just wasn't a good routine for me. So what I did is I put together a morning checklist. I have to be mentally prepared and be ready for the day and actually be in a good mood to trade. I got to be physically prepared and actually have slept enough hours, got some breakfast, and been ready to sit down at my computer, and I've already gone through the entire morning routine. So that is a big thing for me, and that has significantly helped my trading. I also check on my past performance and the market conditions. So my morning checklist is like, make sure I'm mentally prepared, make sure I'm physically prepared, go through my trading journal and make sure I see how I've done over the last little while, what's worked and what didn't work, and then jump into the markets and see what are the indexes doing, what is the market direction right now, what is the VIX at, how is the market handling the first pre-market or the first 10 minutes of the market opening. Those are the things that you need to check before you make any trades. Okay, now the next section here is your trading goals. Now this section is really important because by setting these goals early, you can figure out if you've hit those goals. And what I mean by that is if you have a target profit every single day of $100 or $1,000, you can know when you walk away from that computer of, yes, I hit my goal and that is working, or no, I didn't hit my goal and that did not work for me. This gives you the good day or bad day indicator, and you have to have this set ahead of time because it gives you something to work towards. Now, number of trades is definitely flexible. You do not need to get out there and say I'm going to make exactly 4 trades, but you do need to have an idea of, I'm going to make 5 to 10 trades, or I'm going to make 30 to 40 trades today. You need to have that in your mind so that you don't go crazy and overtrade, and you actually capitalize on the positions that are presented to you. Next is your target win rate and your risk return ratio. So these are basically, what are you looking for? You are looking to win 50% of your trades and a risk return ratio of 2 to 1. Well, that will make you profitable even if you only win 50% of your trades. So setting your target win rate and your risk return ratio will help you figure out what you need to do in order to hit your target profit. And thinking about all of these things together is what helps you set realistic goals that actually fit with your trading strategy. Okay, now the next section on this guide here is the risk management. Now this is definitely one of the most important sections on this entire template because this is how you prevent yourself from blowing up your account and losing all of your money. And now risk management, I have to be very clear about this, comes down to 2 different factors. Primarily, risk management comes down to position sizing and diversification. What I mean by position sizing is how much money you put into every single position that you take or every single stock that you buy. If you own 20 different stocks and they all hold 5% of your portfolio, you have great position sizing. However, if you own 20 different stocks and they are all in the exact same industry, you have terrible diversification, and that can be a major risk to you, especially if outside factors impact that specific industry. Your portfolio can take a major hit. And so having good position sizing as well as having those positions diversified as in different industries is super crucial to your risk management, and those 2 factors are the absolute largest when it comes to your risk management, and so you need to be on top of especially those 2 factors. You need to have that well determined in your head before you make any single trade of what your position size is, or at least what your maximum position size is, and if you're swing trading or long-term investing, you need to make sure that they are diversified. Now the last 2 factors in risk management are making sure that you set a hard stop loss. If you are short-term trading, if you're day trading or swing trading, you must have a stop loss. Unless you are buying in for cash flow or you're long-term investing, you should have a stop loss, or you should have a point where you are going to get out of that stock because your analysis was wrong. You need to be able to admit that you were wrong, you need to be able to take the hit, and you need to go out and do more research, figure out why you were wrong, and apply those learnings to find the next opportunity. The last factor is earnings. Do not buy a company if you are not aware when the next earnings is. The last thing you want to do is buy the stock and then the earnings earnings come out tomorrow and they have terrible earnings, that is the last thing you want because it is going to absolutely trash your stock, and that comes down to risk management. Okay, now this middle section here is what people think strategy is all about. They think it is the most important section, and I have to be totally honest with you, it is everything else. Anybody can draw out a pattern, anybody can draw lines on a chart and say this is a good time and this is a bad time, but managing everything else, the trading goals, the risk management, and reviewing your strategy, that is the most important part. It is not the entry and exit. This is the easy part, and let me show you what I mean. Okay, so for me to get into a stock, this is just an example, but for me to get into a stock, I buy in on two different patterns. Number one is a clear bottom, and so what we have to see here is clear support. We have to have a very clear indication of support at a specific price level. We want the price to go back up, come back down, hit that price level or come very close to it, and then see a very, very clear reversal in a good company. That is what I am looking for, and that is my bread and butter. That is what I am a major buyer of, and that is what does really well for me. So if I see a major turnaround, I see increasing volume, and I see the MACD or the RSI confirm that that is a buying opportunity, that is when I will enter the stock. And so when you think about this, all I am doing is I am looking at a bunch of different companies and I am scanning them almost like an algorithm looking for an opportunity, and when I find that opportunity, I'm going to get into it. Now, the cool thing here is that this is actually the easiest part. The harder part is going through a morning routine and a checklist and being disciplined and only doing X position size and making sure you're diversified. Those are the hard things, but finding this cool little pattern with some fancy lines on the chart, that is the easy thing. That is the easy part. Let me be very crystal clear about this. It is easy to find double bottoms. It is easy to find breakouts, but managing everything else is the hard part, and that is the difficulty. Okay, so we've got the double bottom here. I also buy on breakouts. So what I'm looking here is clear resistance. So if we see a double top, a triple top, and then we see a breakout of that resistance, that is what I am looking for. I'm also looking for that stock to be already trading above its moving averages, and I'm also, again, looking to the MACD or the RSI for confirmation of that trend. I am not making my trades based off of indicators. I am making my trades based off of price action, and I am confirming my trades with the indicators. That is how you actually make the trade. You do not make your trades based off just the MACD or just off the RSI. You let price action determine the trades, and then you use the indicators for confirmation. Now, to get out of these trades and to exit them, it's really simple. So I set a stop loss right below support. So if it's a double bottom here, I'm going to set a stop loss 5 or 10% below the support level right here. And if it dips below that, I'm going to get out because I am wrong. I'm going to admit that I am wrong. I'm going to cut my loss early, and I'm going to wait for the stock to continue to fall, or I'm going to go find a different opportunity. However, if the stock starts to go up or it starts to trade sideways, there's a couple different things I'm going to do. Number one is I'm not going to move that stop loss any lower. I'm not going to lower that stop loss and say, okay, maybe the pattern's changed here. I'm going to move it down a little bit and take a loss. That is not going to happen. That is never going to happen. As soon as I get in and I put my stop loss below support and I'm expecting a pattern, if it does not execute, I clear out that trade and I move on to the next one, or I wait for a better opportunity in that stock. I do not move the stop loss. However, if that stock begins to move up and I'm starting to make some money, I will convert that stop loss into a trailing stop loss. And what that does is if the stock continues to move up 5, 10, 20, 30, and I have my trailing stop loss at, let's say, $2, what it will do is it will move that trailing stop loss up with the price so that it always stays 5 or 10% below the high, and then as soon as the stock turns around, it hits my stop loss and I'm out of the trade. That way, it protects my downside, but it also gives me the upside in case that stock decides to run. I also only accept a max loss on any stock position of 15%. Options are a little bit different because they're extremely volatile, but I usually won't accept any loss on a stock of more than 15 to 20%. If I lose more than that, I was just wrong about the pattern, I was wrong about the strategy. I would rather cut my loss and get back in at a lower price or find a different opportunity rather than continue to hold and try and catch a falling knife. That is not what I want to do. Okay, now when you're done for the day, the last thing you need to do is you need to review your trades, and you need to upload your trades into a trading journal. You can do this in a notebook, you can do this in an Excel sheet, you can also do this in a software. I highly recommend it. This is an absolute must. You absolutely have to have a trading journal if you are going to be a short-term trader. If you're going to day trade or swing trade, you have to have a journal because it will give you your average risk return ratio, it will give you your win rate, it will give you all of the factors that you need in order to refine your strategy over time and improve as as a trader. So if you are not journaling your trades, it's kind of like a pilot that doesn't document his flights. Would you get in that plane? No, you probably wouldn't. This thing is the exact same thing. You need to journal your trades so that you can understand what went wrong, what went right, how you can improve over time, and so that you can review for your morning checklist tomorrow. Now, when I review, this is what I do. I upload my trades to the journal. I talk to myself and I say, hey, did you meet your goals for the day? When you walk away from that computer, did you hit your target profit? And how were your ratios? Were they in line with what you wanted? What worked? What did not? I ask myself that, and then I ask myself, how can I refine that strategy? And what will I do differently tomorrow? The best way to improve your trading for the future is to look at your trading in the past and identify where you went right, where you went wrong, and how you can correct it and refine your strategy for the future. And luckily, in order to help you with that, I have a couple of resources. So if you're interested, I have a stock market course. It is hosted on Skillshare and it is completely free. When you sign up for a 2-week trial, then you have to pay about $12 per month, but you get access to the full platform. And if you can do the 8-hour course in under 2 weeks, you get the entire thing for free. Just cancel the subscription. I also have a link down below for $50 in free commissions for Questrade. That is the day trading brokerage that I use and I highly recommend it. I also have a link down below for the trading journal that I use. I highly recommend them. It is called TraderSync and it is the most data you will ever be able to pull from a trading journal. All you have to do is export your trades at the end of the day, click upload into TraderSync, and they will give you all of the data and analytics that you could possibly want for all of your trading. And the last thing is this one-page trading strategy is available for download on my website at zachhartley.com. If you're interested, definitely check it out and consider joining the Discord chat that we have. It is a community of traders designed to help each other trade, get better, and share their trading ideas. I post all of my technical analysis in the group chat almost on a daily basis, so if you're interested, I would love to have you there. It costs $5 per month. You can also sign up on my website, and I will see you guys in the next video. Peace.